Hey guys, Akil Stokes here. Welcome back to another video. We're going to jump right into today's topic, which is early profit taking, an issue that most traders have. And hopefully in today's video, I can give you two solutions that will help you with that problem. But early profit taking is a major issue for many. And if you don't believe me, right, and I wish I remembered the name of this article. There was an article written years ago. I actually did a trading video on it. It was written by David Rodriguez for, I believe, Daily FX. I don't remember the name, but he did a study looking at retail traders to see why do most retail traders fail. And the initial thought is that most retail traders fail because they just can't win. But lo and behold, when the stats came in, boom, it showed that easily retail traders win the majority of the time, meaning more than 50% of the time. So if retail traders don't have an issue winning, how come most of them fail? And when you look at the average win and loss, that's where all the differences are made. Now, you can say that maybe retail traders set themselves up initially in positions where they are, they can make less than they would lose. I don't think that's the case. I think most of us are smart enough to know that we should at least be putting ourselves in a 1-to-1 or more than a 1-to-1 favorable position. The problem is there's a difference between actually starting off that way and finishing in that way. And when you make mistakes like early profit taking or moving stops back, that's when you get those variations in that average risk reward, right? Early profit taking obviously takes away from your reward. Moving stops back, right? Fear of getting stopped out. So you're pushing stops back. If you're even using stops at all, that's where you increase that average risk. Average risk gets bigger. Average reward gets smaller. You can win more than 50% of the time and you're still going to lose. And I'll share an example of that in a little bit. But I want to take a chance to walk you through a trade I took this week that represents really a perfect example of this early profit taking dilemma. It shows you kind of why the temptation to do so is there, and also the result and reward, I guess, of not doing so. But just to give you a quick update on my trading for the week, 4 trades taken this week. So far, 1 win, 2 losses, right? Both of those losses came from trades I brought to you in last week's Trading Edge video. There was one that ended up winning, but I couldn't enter it because of the risk reward. And then I'm currently sitting in 1 trade right now on the dollar Canada. So that's gonna swing things one way or the other. So far, it's a break-even week, right? My 1 win made up for my 2 losses, which is good. Depending on how this dollar Canada trade ends up, I could be up for the week, I could be down for the week. Either way, I'm still up for the year, right, by about 8%. So 8% more than what I think I should be at. Usually by this point in June, I expect to be at around 18% return on investment. I'm sitting at about 26 right now. So we're still on track as we get almost halfway done the trading year. But let me walk you through this trade on euro dollar, and I'll be brief. And explain what we were looking at, right? So initially, this was a head and shoulders pattern here on the euro dollar. A head and shoulders bottom is the name of this pattern. And it's a classic reversal pattern in the market. We've talked about it many times in this video, where basically the market comes down, right? We have our left shoulder over here, this period of consolidation, our head or double head down here at the bottom, right? This ends up being our neckline. This ends up being our right shoulder. And what we're looking for is we're looking for a violation of that neckline to give us the sign that the head and shoulders pattern is valid, that we are going to see that reversal from directional movement in one way to another way. And how I like to trade this, right? There are many ways to trade it. I am a pullback trader. So how I like to trade it is I like to look for that violation. I like to look for the pullback, and I like to get involved right around this area. Now, I wanted to get involved here. 2 things that were occurring. One was I was asleep when the entry signal came. 2, I didn't have a quality risk reward anyway, so I wouldn't have been able to take it even if I were awake. And this sparked a really good conversation in our live trading room about just being patient, right? Our projection was that price was going to continue to these highs right up here, right? This previous level of consolidation right there. And until we hit that level, right, there were still opportunities to get long. So we just were patient. We waited for a secondary opportunity. You can see price put in a new structure high that gave us a fresh reset, a fresh break as we call it. We got a retracement right here. And I ended up getting my entry, I'll draw it on for you, right on this candle right here. This is a higher high, higher close candle, right? Stops were down at 119.09. Targets were at a retest of previous structure high. So all in all, a pretty good trade. But what you can see happened before that trade completed was this, right? So a little bit of psychological pain. You'll see this as we go into replay mode and kind of walk through real time. So not only did we initially go backwards right after my entry, right? My entry again was right here. I'm gonna get this out the way, right here on this candle. That green candle in there. I'll put an arrow in the recording so you guys can see it. So entered the trade initially, boom, market goes against us. And then we start to kind of go up, go up, go up. So imagine I wake up in this trade and we see price has done nothing during the European session. And then finally, we've gotten some action to the bullish side before retracing down a little bit more, right? Then we come all the way up. I think this is gonna be it. All the way up about halfway to our target. And then we reverse. Right? So right now, this is where it gets difficult because you're looking left, you're creating all these reasons. Oh, there's an inside level of structure here. I bet we can see this on the 15. Oh, look at that. This is another head and shoulders pattern. It's going to reverse without me. Everything we can say to ourselves to psych ourselves out into getting out of this trade, we're going to say to ourselves, because the reason that we take profits early are for one of two reasons, right? It is either greed. We are greedy. We want our money. We want it right now. We don't care how much it is. We just, something is better than nothing, right? You guys ever heard the term, it's the stupidest saying ever. You can't go broke taking profits, right? Whoever, if anyone says that, and I hope not to offend, but you should reconsider how you speak. It is dumb. You can certainly go broke taking profits if your risk is outweighing those profits, right? If I take, I had a guy I worked with once who his goal was to be a 99% trader. Stupid goal, but that's what he wanted to do. And he ended up hitting a month where he was 99% and he lost money. Why? Because his 99%, he was taking 1 pip of profit per trade, but taking massive losses. So, I guess his ego was inflated, but it didn't do anything for his account. So greed is one thing. Another one is fear. You see this and you fear that you're wrong. You also fear that you're going to lose money, and then something is better than nothing. I got to get out before the market reverses and takes me out for a loss, right? These are the emotional feelings that come. And you can see the market will play around. Actually, this is the bar I think it came up to, so a little bit more than halfway, before retreating all the way back down to break even. And again, making it very, the temptation to bail is very high here. And then eventually we rallied up. Eventually, here we go, rallied up and hit targets. But I want to show you guys the difference between what it looks like in comparison of taking targets early versus seeing your trade out. Because many of you guys are looking at this and you're like, well, it doesn't look like that big of a deal. And I'm going to show you why it is with a few comparisons. So let me do this, and I'll probably do some magic editing so you don't have to sit through this, but I'm going to take the risk reward on this trade. Let's pretend all your trades are like this, right? They're not, but let's just pretend your average risk reward is 1.5 to 1 or 1.6 to 1. I'm going to show you what 1.5 to 1 or 1.6 to 1 looks like, and I'm going to show you what it looks like over time, because you can see how this thing actually changes as you get more than one trade. Because typically with trades, right, like one loss won't kill you, one win won't make you successful. It's how they accumulate over time. So this is what it looks like on one. I'm going to quickly edit this and show you what it looks like once you get to 10 trades that had the same risk reward. And let's say you're a 60% trader. All right, so give me a second. All right, so let's say you're a 60% trader. So you took this same type of trade, risk reward, 1.6 to 1. You took it 10 times. You won 6 times. Oops, I didn't do enough there. That's 4. Give me a second. You won 6 times and you lost 4 times, right? This is going to be a good visual representation of what your P&L will actually look like, right? Your wins are your 6 wins, 1, 2, 3, 4, 5, 6. The red boxes are your 4 losses, right? Everything else is going to be how much profit you took home. So at the end of the day, this is your net profit, right? Your profit minus your loss. Now, let's take a look at this real quick. And I'm going to just adjust this a little bit, and let's pretend that we took targets off early, right? Let's pretend we took targets off at this first little bump right here, and then I'll redraw those on and make a comparison for you guys. All right, so I just put it on. I changed the color a little bit. Blue is going to be that secondary early profit taking. And you can see the difference, right? Instead of having a net profit of this much, you now have a net profit of this much. And of course, you take out stuff for taxes, commission spreads, all that fun stuff. That's going to shrink down even more. But you're leaving this much profit on the table. And this is only over 10 trades, right? If you're someone that is taking 100, 200 trades a year, right? You have to multiply this by 10 or 20, and that gap is just going to increase bigger and bigger and bigger. So although early profit taking doesn't seem like a big deal when it's only that one opportunity, it makes a massive difference over time. Now I know what you're saying. Well, Akil, I'm only going to do it this just once, right? I'm only going to do it this one time. I promise I won't do it again. Let me tell you a story about someone who did that. I had a friend of mine, right, who, this is the guy that introduced me into trading, and he started taking early profit taking because he had a trade that, you know, price action came 1 pip away from his stop loss in reverse, and he felt bad. So the next time it came 1 pip, he exited at 1 pip, right? A little bit early, right? No harm, no foul, right? Well, long story short, that 1 pip turned into 2 pips, that 2 pips turned into 3 pips, that 3 pips turned into 10 pips. And before you know it, he was cutting his reward in half by 50%. And what didn't change was his win percentage, right? It changed a little bit, but not too much. And so he was doing everything he was supposed to be doing, but he was losing money because his small wins, his self-inflicted small wins, were no longer covering for his losses. So let's talk about some solutions now, right? So the two keys we want to focus on are greed and fear. And one of these solutions is something I actually implement. Another is one that I've read about in, I can't remember which one, but one of the many trading psychology books I have. And let's focus on the first one, which is creating a close enough rule, right? So in order to get rid of that fear, right? The fear is losing money. I guess it could be missing out on profit as well, but that's more kind of greed. So losing money is the fear. I don't want to go backwards in my account. Implement a close enough rule where you have a level, a defined level of what close enough is. You can't just think about it on the fly because you'll make it whatever you want, but define a close enough rule. For me, close enough is going to be 2 pips, right? On the hourly chart. So if price comes within 2 pips of my potential target, I then reduce my risk. So I move my stops to break even. No, I don't make any money on the trade. I can't exit, but I eliminate any possibility of me losing money, and that's a big weight off my shoulder. I think most of us in trading, right, are fears with losing money. We don't want to lose, especially if I'm a risk-averse trader, right? Risk management is the number one thing for me. So my happy place in a trade is when stops are at break even. For me, all the pressure is gone. I don't want to say I can care less if I win or not, but it doesn't matter. I'm not going to lose money. So eliminating that fear, at least portion of that fear, that's going to help calm you down. It's going to settle you down. It's going to allow you to stick with the trade and really see it out, knowing that worst case scenario is you're out for break even. Another tactic that I heard, and this is one, I don't want to even say I advise it. I don't implement it, but I'm putting it out there to you guys because everyone's a little bit different. There was a story of a trader where he was allowed to take profit early at, it was a very small level. I think it was like 5 or 10 pips into the trade, or maybe like a third of whatever the full profit target was. But he was only able to remove a small portion of his position, right? So if he was trading, let's say a 4-unit trade, right? 4 contracts, he was allowed to take maybe 1 contract out at whatever this early profit taking level is, and then let the rest of it ride. And at first it didn't really make any sense, but what he said was that it was really about eliminating that greed. For him, taking anything out, even a measly portion of your position, fulfilled that need of needing to make money or not losing everything on a trade. As soon as he fulfilled that need of knowing that, hey, I'm not going to lose anything, or I'm going to make something, or at least the feeling of making something, when he did that, it eliminated the greed of needing to take the rest of it out. Again, that's something that I wouldn't personally recommend, but everyone is different, right? You have to try and figure out what works for you, what is going to get you in a position that you can see the trade out. So that may be something that you want to focus on. And of course, for you guys, that if you have any other ideas or tactics that you use, or anything like that, feel free to leave it in the comment section below. I think this is an awesome discussion. Trading psychology is not something that a lot of traders want to talk about, but it's something that we need to talk about. And seeing how we are all different, I love hearing the different techniques and tactics you do to kind of overcome these psychological battles. So before we hop into the charts, I just want to follow up on, I talked about psychological books. If you haven't seen it already, Jason Grayson and myself in this week's episode of the Trader Coffee Break, we talked about our best trading book. So check it out. It's about a 20-30 minute episode sharing with you some of our favorite books, our favorite lessons from those books. Definitely a must watch if you're a newer trader or a trader that's focused on continued education. All right, let's hop into what's new for this week idea-wise. So let's start off on the pound dollar. And before we get into the new setup, it's ironic that I bring this up because I just shared with you guys the lesson on how if price action gets within a few pips of my targets, I reduce risk by rolling stops to break even. And this was a trade this week where this rule bit me in the butt. So this is a situation that will actually kind of, push traders in the direction of doing the wrong thing. So if you're not focused on process over outcome, these are the scenarios which make it tough. But I entered the cipher down here at the decompletion point. We ran up, you can't not here, but before here, right here, about 2 pips, or actually it was 1 pip before my profit target, before reversing back down to break even, where I was eventually stopped out for break even, and then only to rally up for targets, lo and behold. So again, when we give these examples, I don't want you guys under the impression like it always works in our favor. Sometimes it's going to work against us. That is just trading. But the number one thing was I stuck to my plan, stuck to my rules. It was a good trade. It just sucked, right? But let's erase this. Let's look at another opportunity that's on the radar on this pair. And I'm going to zoom out a little bit and just use my Enigma pattern recognition software to make life a little bit easier. And we are going to see a potential bigger cipher that forms down here as well. So if price action pushes a little bit further down, I'm going to be back involved around 138. What is that? 138.83 looks like. Am I reading that right? 33s, my eyes. 138.33s for another potential bullish cipher formation here on the pound dollar. So next we're going to head over to the dollar yen. And this was a trade that I shared with you guys, or an idea I should say, that I shared with you guys in the middle of the week on social media. So if you guys aren't following me on social media, make sure you do that. Make sure you follow me on TradingView as well for some of these midweek ideas. I did a few quick 1-minute videos over there, which people thought were pretty cool. But the overall idea for this trade was that we were at an interesting point, right? We were at an area that looked like a previous level of structure resistance, which it was, right? You can see by the VS1 level right here, that blue box at the top. But if you look above that, we had overlapping levels, meaning higher levels of structure resistance as well. So my thought process is that this could be kind of a fake out level. We could see a break and then looking for shorting opportunities at one of the higher levels. But we actually held this level pretty decently thus far on the lower time frame. So if you're a lower time frame trader, you may have an opportunity here. And what we did was we put in a little bit of a rotation, right? We double topped at the highs, and then you can see we came down. We refused to break previous structure support looking left. We came up, and then finally we put in this new structure low. Now, as we make our way back up, we had a nice aggressive V reversal here on Friday. I'm recording this Friday afternoon. It's been a hell of a day. Usually Fridays are pretty slow, but today we've been moving. You can see that we had a pretty aggressive move to start things up. And now we started to kind of lose momentum. Now, again, part of this is we just came after a big move. There's profit taking. A lot of part of this is Friday afternoon already. The UK market is closed. It's really just the US that's left open right now. And so there's only so much liquidity in the market. But something to pay attention to would actually be a continuation trade to the downside. So watch for this on the open to see if this loss of momentum pattern continues, especially if we continue to push up a little bit for towards this previous level of structure right here. At the same time, look for signs of divergence on the RSI, so price action making its way up, but this RSI continuing to dip like that. And there may be an opportunity for a nice trade back down to retest these previous structure lows around 110.50s, and then a move even lower. I've got to do a little bit more research on that. We can revisit that if it happens, but first thought right now, just tells me to put on a Fibonacci extension, look for that 618, or that 1618, excuse me. It looks like that's gonna line up right with a 618 Fibonacci retracement. That'd be a brilliant cross if we do. Ooh, close. Close. Right in this zone right here. Do we have any psychological numbers? Not really. But to look for a move somewhere in this area. But again, we can revisit this next week or maybe in the midweek markup if this ends up playing out. Now, lastly, we're going to revisit Ethereum. This is something that we looked at in the midweek markup a few weeks ago, and you guys got all excited because I was looking at a cryptocurrency. I got so many messages about it. Hey, do I trade them? Do I invest in them? I do absolutely zero with cryptocurrencies aside from answer questions that you guys have on technical analysis. So this was brought up with a few traders. This trading video is for you guys to give you guys some insights and answer what you guys want to hear. So that's why I'm looking at it. But personally, I'm just not invested in crypto. Nothing against it, just not knowledgeable enough, nor have a desire to be in that market as of yet. But to follow up on this, if I remember correctly, I remember we talked about a bigger advanced pattern formation here. And I may not remember correctly because I look at so many charts each day. But I think we talked about this Gartlian and the buying opportunity at the lows. You can see that we essentially, this Gartley or bat, we have fulfilled that, right? Price action has come down, X to A to B, B to C, C to D, right to that advanced pattern formation zone. Well, on a smaller time frame, if we go down to the 4 hour, right? We may even need to go down to an hourly, so more of a kind of a short-term intraday trader as well. Within this zone, we're gonna have a potential cipher pattern as well. I think we actually may be right at market or right before market, right? I'm gonna measure this out and I'll kind of draw in the triangles and whatnot later. But this is gonna be our initial move right here, our X to A. Our A to B is gonna be our first retracement. Our B to C is going to be this first extension, and our CD completion is going to give the cipher a completion right down here at the 786. So you've got a higher time frame pattern formation. You've got a lower time frame pattern formation. You've got a pretty significant level of structure that we're at just looking left. This is going to be a decent place to look for a buying opportunity. Now, again, with these pattern formations, these are counter trend, quick relief type of patterns. So when I say a buying opportunity, this is different than one where we're expecting the market to reverse and blast off all the way back to the highs. We're looking for a very short period of relief, right? A chance to get in, a chance to get out, and then allow the market to go on in its intended direction. Just thinking about the intended direction in general, just from a technical perspective, I guess we don't have it yet. I was going to say we have like a descending triangle setting up, but we really actually don't. So we'll take that back. But it'll be interesting to see if we do end up breaking these lows. For me, whenever I see consolidation, a tight consolidation at the lows, I anticipate a breakout to the downside. Now, again, this is on the daily time frame. That smaller pattern can easily win before this happens. But just from a technical perspective, when I see this tight consolidation right by previous lows, it says a lot about how much or the lack of buying pressure in the market in comparison to the selling pressure. And if the buyers were to give up, they've got stop losses, right? Sell stops resting right under this level. There's probably going to be a pretty significant break to the downside with a retest of our next level of inside structure right around here. So something we can keep on for the future. So hope you guys enjoyed. As always, hit that like button, subscribe if you're new. I got stuff happening on this channel almost every single day or on social media every single day. Monday, Trading Coach Podcast. Tuesday, midweek markup. Wednesday, Trading Coach Podcast. Thursday, Trader Coffee Break. Friday, Trading Coach Podcast. This weekend video. So stay in the loop, stay in the know. Support what we're doing here by hitting that like button. Of course, if you have any questions or comments, leave it below. I did get a tweet the other day of someone that had a special request for a video. So I'm going to do that next week on entries and entry types and how to use them. So look forward to that. And until next time, plan your trade, trade your plan. You guys have a great weekend. Enjoy your Euros. Enjoy your NBA playoffs. Sucks that my Sixers are out, but yeah, whatever.